We're asking the big questions with markets on edge and global tensions rising. Should investors be worried or should they hold the line? Joining us is Dennis Lim, equities manager at Abacus Securities and a well-known content creator in the investing space. Today, Dennis will walk us through how markets have historically reacted to geopolitical conflicts, which sectors could be most exposed, and where the smart money might be moving amid the uncertainty. Welcome to the show again, Dennis.
Hi, China. Thank you.
So,
Thank you
a
for
while ago-
inviting me again.
Of course, balita ko, favorite ka ng crowd eh.
Naku po.
So I was actually thinking because, this episode, I actually made this possible to have two schools of thought. The first one is technical analysis, in which you don't have to look at the news. All you need to do is to see the charts. And then the second phase is you identifying the fundamentals behind what the chart is saying. So let's start with the big one. With everything that's going on, should investors be afraid right now? Is this the time to pull out or stay calm and ride it out?
Well, fear is a natural reaction to events like this, but my advice really is panic is not a strategy. So do not let panic dictate your movements. Markets historically have been more resilient than people expect. So it is not the time to lock in your losses. It's a time to be patient. Maybe take this opportunity to reevaluate why you are in the game and look at your positions. And by just staying calm, you'll come out in a better situation when things start to calm down.
So there is a term called whiplash. How true is it in someone who's trading in this kind of market? May buntong hininga doon Parang naramdaman ko nangyari sa'yo
Well, for example, yesterday we were all praying for peace, and we got it today. So, right? So if you panicked
Can you
yesterday and went to the grocery to
buy all
to
the
buy
canned
everything you
goods.
can buy, I'll buy pure gold today.
Oh.
Right?
Yeah, exciting. In moments like this, we always look back, and what does history tells us about the markets behave during wars or major geopolitical conflicts?
Yeah, I mentioned before already that people think that situations will always get worse, but they always become better before they expect it. So sometimes they will FOMO themselves, oh, the war's over, now I want to buy, but the market's already up. So the markets will always bounce back. Historically, even in COVID, even in the Ukraine-Russia war, the markets were able to bounce back just within months, right? And right now, hopefully the markets can continue to bounce back after just a few days.
And talking about a while ago, Spyfrat mentioned about a big range, I think 5 years of big range. What do you think, I know that we cannot predict future happenings, but if there's going to be one catalyst that will break out the market in that big range, what do you think is possible in this current situation?
Catalyst, well, what Spyfrat said earlier was true, no? So the market has been trading in a range for actually not only 5 years, but 10 years. If not for the COVID, the range would have been the same, right? So what I advise investors really is to navigate the local markets. It's buy low, sell high strategy, right? So when the market is down in the 5,800, 5,500 range, you buy, and then when it goes to 7,500, you sell. And if you did that for the past 10 years, then you would have been fine. The catalyst, historically, the catalyst has always been geographical stability, right? We are an emerging market, so we are dependent on foreign funds. So as long as the foreign funds are happy, we are also happy. But a local catalyst could be better economic numbers. We are projected to grow the second fastest in ASEAN countries. So if we are able to hit that growth expectation and surprise investors, that could be a catalyst that could probably break us out of that range.
It's good to hear some good news naman, di ba? So it's even if it's not yet happening, I mean, something that to look forward to. And talking about like when the market is down, do you believe in catching falling knives?
Well, there's a difference between catching a falling knife and strategically investing when people are irrational, right?
Okay.
So we have to differentiate the two. And what separates the two is really fundamentals and speculation, right? So you're catching a falling knife if you're just speculating, but you're strategically entering into a cheap position when it's a fundamentally sound bet, right?
I see. So based on what you're seeing now, which sectors do you think are most at risk or immediately impacted?
Right now, because of the nature of the threat, it's really about rising oil prices. Of course, the sectors that would be affected would be airlines, travel, right? And in general, because the Philippines is an oil importer, we import all of our oil. Most of industries could get some form of hit. But I think the sectors that would be safe from that, probably properties, maybe, or even pure gold. If you think about it, there's SNR. So if our peso
Importation.
depreciates, the cost would be higher. But things like Converge, right? I mean, Manila Water, right? Well, oil and water are two separate things. So you know
bigat
how
lang
I love Manila Water. So
Yeah, you told me so. On the flip side, are there sectors or asset classes that typically thrive or even strengthen during this time, turbulent times? Is that MWC, as you were mentioning?
yeah, well, utilities, yes. In times of uncertainty, people look for certainty or
Okay.
consistency. So they'll go with companies that have proven track records. They know, yan na tinatawag na maninigurado. Eto maaasahan to. So they'll go to certainty and safety.
Nagiging segurista.
Yes.
So as a trader, a position trader and a long-term investor, what should each be looking at right now? Are the signals different for each one?
For a trader, particularly if you're a day trader, of course, you're just looking at charts. You have to be more tactical and not make any strong directional bets, right? So because you're just trading day to day. For position traders or swing traders, you would have to look at potential rotations among sectors. What Spyfrat mentioned earlier, he was looking at RRHI, SMPH. These are battered stocks that I feel have been unfairly battered stocks. So investors might start to find value in these stocks. So there can be a rotation from overbought
Reversal.
stocks into these value sectors, right? So, but for long term, of course, you just use this as an opportunity to buy the dip and then reap the rewards, 10, 20 years later.
So let's do a rapid fire questions just to answer yes or no. You don't have to explain your answer. So ever made a trade just because you like the company's logo? Yes or
No.
no? Okay. Do you secretly cheer when your favorite stock hits a new high?
Not secret, openly.
Alam mo, nagbabasa ako ng comment section and funny is like, I saw one of the comments and saying na I was giggly talking about stocks with you. That's so funny. Have you ever dreamt about stock charts?
Every night.
Every night. And do you think your portfolio has a mood like a person?
Yes, yes. It reflects my yearly mood in terms of macroeconomic backdrop.
What do you think is the most resilient stock in whatever kind of market there is?
Specific stock?
Sector or stocks?
Sector, the most resilient kind of stock? Well, globally, I would think technology would be the most resilient area there. Defensives here, right? Meralco, Manila Water, things like that.
Okay. And then I'm gonna give you the question that will start here as a tradition in Follow the Money. Complete the statement. Money is the root of all blank.
Money is the root of all, ang hirap naman yan. Hindi love of money di ba? So,
Hindi
money
love
is
of
the
money.
root of all purchasing power.
Ayun. I agree. And finally, this is our signature question. In times like this, where do you think we should follow the money?
Follow the money into value. Money will flow into safety, into cash. Again, when times are uncertain, we will look for something consistent. So follow consistency, follow dependability. So look for dependable companies where you are confident that they can weather any storm.
Ay, stocks pa rin ba yung parang relationship na yun? All right, thank you, Dennis Lim, Equities Manager at Abacus Securities and content creator, for kicking off our conversation with a big picture view on how investors should be thinking in times of global uncertainty. Your insights on geopolitical shocks, sector risk, and resilience, and investing strategies for traders, long-term investors, gave our viewers a well-rounded playbook. And of course, thanks for playing along in a rapid-fire round.